The nice thing is when we have these larger premium lessons that you guys can actually interact with me a bit more as you're learning some concepts, right? Because the reality is that watching a lecture of mine that's pre-recorded and then actually being able to engage in that lecture and ask questions are two different things, right? So definitely take advantage of when I have these, premium types of lessons. And yeah, don't be shy. Come off mic, raise your hand, engage with me, ask questions. It's going to help you a lot in your development. And, it's a great opportunity to actually get your questions answered by me. Okay, so this lesson this week is going to be on weekly profiling. My students we've done several lectures on this, so they're going to be experts on this as well if you have any questions. But what we're going to be talking about is the concept that every single weekly candle is going to contain an open, low, high close or an open, high, low close. So if we have a generic candle here, every single candle, whether it's a weekly, a daily, a 4-hour, or an hourly candle, it doesn't matter, it's all fractal, is going to look more or less like this. Now, understanding that we have these wicks formed in the vast majority of weeks, so not every week, but the vast majority of weeks, can give us an insight into how the internal dynamics of this candle actually form. That is to say, we want to position ourselves in any candle with an open, low, high, and a close inside of the opportunity area of this wick or the early part of the expansion of the candle. So what weekly profiling serves to do is it serves to understand when this wick is being formed, under what context, day of week, and the structural context, and then it gives us a framework to trade the expansion phase of the candle. So just like you've heard me talk about something like protraction, say this is a bullish weekly candle, price is only ever doing one of two things or one of three things. Price is either going to be consolidating as a function, protracting or manipulating as a function, or expanding. This is why we are very used to seeing open, low, high, close in a way that's similar to this fashion. Now, it doesn't always have to contain consolidation. Sometimes it can simply look like this. It's a very common way of depicting an open, low, high, close scenario. Now, what's important to recognize is that the universal best condition to trade is always expansion. So trading from the low of a weekly candle to the high inside of the expansion phase is going to be the highest probability and, strictly speaking, best opportunity. So what we utilize as ICT traders is a concept like profiling, like weekly profiling, to best understand when the expansion phase of is likely to occur intra-week, right? And we answer the two questions. First, where is price likely to manipulate to? This is the protraction phase of a candle. And two, where is price likely to expand to? This is the distribution phase of a candle. If we can answer these two questions, then we have a very high probability of understanding what days of the week are going to be aligned with distribution once we have observed the protraction phase of the candle. So you notice how I'm talking about a candle very generally speaking here. It's because once I teach you weekly profiling, you can now expand this idea of profiling to any time frame candle, right? So you already know I've taught you protraction profiles. This is the open, low, high, close, or open, high, low, close dynamics of a daily candle. There's also weekly profiles. This is the open, low, high, close, or open, high, low, close of the weekly candle, right? What else? You can apply this logic to an hourly, a 4-hour, a 15-minute, etc., candles. We're looking for the same characteristics that I'm going to go through in today's lesson, and we're going to be using it in a fractal sense. Our job, therefore, is to understand where price is likely to manipulate to, the protraction phase of a candle in here, and then where price is likely to expand to, which is going to be the distribution phase of a candle. And this is going to be, generally speaking, applicable to every candle. Okay. So now that we understand the two real major things that price is either doing, manipulating or expanding, right? Protracting or expanding, let's talk about weekly profiles. Weekly profiles are a way to understand, one, which days are likely to be distribution days. Two, a framework, right, it's going to be mechanical, to determine when the reversal of a weekly candle has occurred. And then three, right, an expectation of how to trade the continuation. So weekly profiles are just a way to understand three things. Which days are going to be our distribution days, right, of that weekly candle. Two, right, a framework, which is mechanical, to determine when that reversal has occurred. And then three, an expectation, right, aligned with those weekly profiles on how to trade the structural continuations of price. That's all we are trying to do when we talk about weekly profiles, when we talk about profiling a weekly candle. So generally speaking, there are, and again, this I have 3 to 4 lectures in premium on profiling. Today's lecture, right, is going to be very specifically looking at a generic sense, right, and talking about how we're actually utilizing profiling with confirmations of order flow to determine when the weekly candle has reverses. But you can get into the more specifics. Things like a classic expansion week is one. We have midweek reversals, consolidation reversals, Thursday counters, right? There's lots of different types of weekly profiles, which I have lectures on that you can watch. We're going to be talking about weekly profiling in a generic sense, right? And not on any specific profile, but just on what all of the profiles have in common. Okay, let's look at an example of what we're seeing. Let's take a look at last week. And let's draw out these vertical lines. So as you can see, the first thing we need to see, right, to determine what the weekly profile is going to be some form of draw on liquidity, right? So what we will always want to do, let me grab all this, is observe the opening days of the week. Remember, why do we care about how the weekly candle opens? Remember, the weekly candle is going to open, right, and either form a high, low, close, or it's going to form a low, high, close. Now, whether or not it consolidates and then manipulates, or it simply manipulates, then expands lower or higher, we want to study the opening days of the week because that is going to give us an expectation as to which one of these wicks is potentially forming or may form. Every time we consider a weekly profile, our job is to wait and see when the weekly candle reverses. What does that mean? Understand when the wick has been formed. Okay, that is the job of weekly profiling, is to wait and to understand exactly when that wick has been formed, right? And then trade away from the wick. And then trade away from that wick that was created, opposing it to the other side of the range. So how do we do that? What we want to do is wait for a higher time frame PD array, something greater than a 4-hour PD array. We want to wait for a lower time frame, change in state of delivery, right, based on the higher time frame PD array. So if we have a daily PD array, we want to see a hourly sysd. If we have a weekly PDA, we want to see a 4-hour sysd, etc. Okay? And then we want to see expansion in the direction of the weekly reversal. We're also going to want to see SMT. If you notice, this is a very similar 3 conditions that I have told you guys to look for something like a protraction, right? What you're waiting for is to see the high or the low of the weekly candle put in with some significant structure. Then you're going to wait for that lower time frame confirmation that that structure has been put in and that we've reversed. And then you're going to trade it in the direction, right, of the weekly reversal. Now, typically speaking, every single candle is a range. That's why you'll often hear people talk about the weekly range protocol. So what we want to do is, generally speaking, every week I like to mark out the previous week high and the previous week low. Okay? This is a more mechanical way to approach every new week in terms of charting. Now, what we want to do is we want to see how the opening days of this week form. So as you can see, this week, we see that the opening days here of the week, starting on Monday, begin by trading higher, above the previous weekly high. So we liquidate that previous weekly high, and then we trade back into the range. So as you can see, the previous weekly candle is this range, which you can see marked out from this previous week high to this previous week low, a large expansion range. Now the opening days of the next week, open high. And then what do we notice? As Monday opens above this previous weekly high, do we have our conditions here for this to be the high, right, of the weekly candle? Well, potentially, right, we have a higher time frame array in this previous weekly high, and we also have what? Do we have SMT up here? Yes or no? Someone tell me. Above this previous week high. No. Right? Above this previous week high, which is our key level, you're lacking significant SMT. So in this case, what we want to do is we want to continue to study the opening days, because we cannot say, if I have a generic weekly candle drawn out here, okay, at this point in time, say it's a down close candle, we cannot say that this wick up here is going to be the high of the week unless we have the following. Higher time frame array, that's check, and we have that, good. Right, previous week high. SMT? No, we don't. So because we do not have SMT up in here, we lack significant divergence of the market up in here. We don't have the information to say that this is going to qualify this weekly wick as the high. So we continue to wait for more information. Then we see that Tuesday consolidates. So Monday manipulates higher and Tuesday consolidates. Okay, you can see that. We're trying to form a range. Again, what do we come in and do? On Tuesday, we come in, and do we form significant divergence? No, we don't, right? We have this shallow run above these highs, the Tokyo highs, and price trades lower. Now, in many cases, we may be able to say, okay, well, in that case, right, we have our weekly change in state of delivery, or we have this 1 hour change in state of delivery, and the previous day high being swept. But again, What we lack in this move lower is a significant divergence at the highs. So maybe we have our higher time frame array up here, which is this hourly swing point, right? But we do not have the significant divergence of market price in there. So price consolidates and then does not expand lower, which is why last week was a very disgusting range, because we were waiting for a manipulation of this range. What does Wednesday do? Wednesday again comes in, we trade lower, right? Putting a failure swing with this previous day low here. Very importantly, right? People could be saying, well, now we can go long this week because you can see we've swept out all this liquidity, which we were thinking of, right? But what are we lacking again at the lows here, guys? A significant SMT, right? So at these lows, we do not have a significant SMT. Neither index took this low. So that's immediately telling us that this may not be a good high probability low of the week. Despite what that happens, the chain is stay delivery. Again, I'm trying to show you how accumulation ranges be very difficult to trade in weekly profiles because they're going to give you these fake SysDs all the time. Right? That's a bearish chain to stay delivery. This is a bullish chain to stay delivery. And we recognized this last week even trading it. We're like, this is a really disgusting range. Now here is where something interesting happens. We have Tuesday and Monday really consolidate. Then we have on Wednesday this failure swing of the market put in before price runs aggressively again back above the buy stops. So we have another liquidity sweep here. Let's mark that out as a stop hunt, okay? So this is when Wednesday runs above Tuesday's high. Now we notice that ES fails to come into that same daily high. So if I look at my daily chart, this is where you're going to see that divergence right in here. Okay? Interesting. Because now what we've seen is that Monday, Tuesday, and Wednesday have more or less consolidated in the market. However, on this Wednesday, we had a stop hunt at a key level, which is what? Previous day high, key level. So that's your higher time frame PD array. Again, remember, the weekly candle is a range. So we're saying, okay, are we likely to trade lower into this range that's been created using the previous week? Or are we likely to expand the range and trade higher on this week? Well, as you can see on Wednesday, we formed this stop hunt, and then what does price do? Price now shifts below the consecutive series of candles that run into that key level. So we have a previous day high as our key level. We have an SMT divergence at PDH on Wednesday. Now we could be framing a midweek reversal. So how are we going to confirm this now, this midweek reversal? Now notice why I'm not, even though Monday actually typically forms the high of the week here, I'm not considering this to be a classic sell week, because even though the weekly candle does something like this, guys, right? And this is Monday and this is Wednesday. This is a very, very characteristic midweek reversal profile. This Monday manipulation is simply, right, a manipulation above the previous week high, and then we start to consolidate. The weekly profile up until Wednesday is a consolidation, which we know all we have to do is wait for an external to be rated. So we have a consolidation low, and we have the consolidation high. As you can see, once the consolidation high is ran with that stop hunt, and we get this change in state of delivery, mark it out as well on the ES. Right. We're now considering that the week can now expand, right, opposing that stop hunt or towards its higher time frame draw, which in this case we already talked about this, last week. We wanted to see equilibrium of this range retraced, right? Because the previous week was a large expansion. We wanted to look for something like that. So now we have the framework, we have a draw on liquidity, and of course, in addition to that, we have a very nice set of imbalances that have yet to be rebalanced by the markets. We have all the ingredients, right, to now say this could be a midweek reversal. What's the last thing that's going to confirm this, guys? This weekly profile. we're going to see expansion in the direction, right, of that reversal. So what does expansion look like? The creation of inefficiencies of market price. That's eventually what we start to notice. We start to notice, as opposed to here, which is largely lacking any displacement. It's why we didn't form the low here and move higher. It's why we didn't form the high here and move lower. It's because we have a low probability reversal of any weekly candle condition here with this lack of displacement. Once we get this stop hunt, this 4-hour SIST, for example, we can use this one right here, right? Then we start to actually form displacement of the market lower. There we go. This is something, right, that we want to look for. This confirms the weekly profile, right? A weekly profile simply is trading the high probability expansion days following the reversal of the weekly candle. And those high probability expansion days are going to create displacement in the market. As you can see, we're also disrespecting old bullish arrays in this case that are becoming inverted, right? We failed to hold support at this fair value gap. This order block fails to support price. Now you can clearly see the market has direction. That is where the opportunity rests. So remember we talked about the two phases of a weekly candle. Let me draw a generic candle for you. This one. This is what the weekly candle looks like. And all of this consolidation phase in here, this is going to be defined as the protraction phase of the weekly candle. That means it's manipulating, or in this case, it's accumulating. This is the lower probability phase of price to trade for this weekly candle. Whereas the minute we get the high probability trading state of delivery and the expansion, this is called the distribution phase of that candle. As you can see, when price is ready to actually expand from this small range, this is where the opportunity lies. And this is why weekly profiling is powerful, because it gives you a context for what days to expect the expansion on. So for here, you can see that once we have finished manipulating and or consolidating, we get the run of the external range high and our change in state of delivery with displacement. We can now say, okay, Monday manipulates, Tuesday consolidates, Wednesday consolidates, and runs external highs with SMT. So Wednesday consolidates and runs the external highs with SMT. What do we think Thursday will do? And what do we think Friday will do? Well, these are conditions, right? If Monday manipulates, then we might expect Tuesday to expand. However, Tuesday does not expand, as you can see. Tuesday fails to expand lower, or else it would have been a classic sell week. It would have been an open, high, low, close, right? Tuesday expands, Wednesday expands, Thursday expands, Friday TGIFs, right? Very, very classic week that we're used to seeing. But then we can see after this manipulation on Monday, Tuesday consolidates. Okay? You can see it. Tuesday consolidates in the market. That gives us a condition. So now we have a consolidation range low and a consolidation range high moving into Wednesday. Wednesday consolidates, then manipulates the range high. We don't know what's going to happen until we see what? The displacement lower. Once we get the run of that external range high and the displacement lower, we then can say Thursday and Friday are likely to form this part of the candle, which you're noticing. This is the part of the candle which you want to trade. You can see it. This is Thursday, and that's Friday. These are the expansion phases of price. Now we confirm that with what? Displacement, right? And these kind of opportunity zones are where you want to trade from on Friday. There. Or like we traded in the morning, this SMT divergence and this PD array. High probability expansion because it's following the weekly reversal. It trails that context. How do we determine that Monday is a manipulation when on Wednesday we see 3 drives lower and still in the range? So the reason why you know I was bearish going into Thursday is because despite this 3 drives pattern, which we kept seeing, which I actually called it a 5 drives pattern if you saw, this creation of high resistance liquidity, I was only willing to engage the market in shorts once we had the external range stop hunt, right? So again, the weekly candle looks like this. And then we had the strong shift. Now I have a context area. So remember, this is the manipulation high, or the range high that we manipulated. This is the range low. If I see expansion through the range low, I now know that we've had A, M, D, and now the X is going to be retracement expansion because the weekly candle has yet to expand. The weekly candle, if it's not going to end as a complete doji, which we can expect, sometimes price might just form a complete weekly consolidation that looks like this. The whole candle is just a consolidation on both sides, and we have really, really deep wicks and a doji candle. Now, we are not expecting that kind of candle to form, which we generally don't, right? We expect to see an expansion candle of the week. Then we know that Thursday and Friday are going to do the expansion. The Wednesday is the preface to that expansion with that stop hunt and then the strong SysD. That's why I said what we want to wait for is for this. I don't know if you remember on Wednesday, I said I'm actually targeting the lower fair value gap. I think we're inducing this fair value gap in here. And the reason why I thought that is because pricing here is forming this high resistance liquidity before running aggressively against this high with SMT. Then once we start to displace towards it, you can see now we can use something like this. And you can see that price has an objective to trade much lower than this fair value gap, but it's actually starting to make its way down into the range now. So all of this HRLR in here, this 5 drives pattern, Amy, right? This is HRLR. This 5 drives pattern is setting up to run that high with SMT before finally displacing. And displacing is what's going to give me the insight. The displacement is the form of fair value gaps that are being created. Once we start creating these fair value gaps lower, now I can look to trade the expansion phase of price. I know price is expanding because you can see we are lacking in efficiency in here. 0 fair value gaps. The only one that exists is the one we want to see, which is the fair value gap into that manipulation leg, which becomes the inverse fair value gap, right? Look at the sensitivity to things like the halfway point of that gap once price forms this change in state of delivery lower, right? It's really nice to see that when you can see that this was the only displacement in the market for the majority of the week. The only major displacement was then inverted with that change in state of delivery and stop hunt. Now we start to see real displacement lower, multiple fair value gaps being respected, and then as we trade lower, we continue to expand the range. So we see the SMT, the SysD, and then for me, it's not enough just to see the SMT and SysD. Fair value gaps or displacement in the direction of the weekly candle reversal confirm the weekly profile. When I see displacement in the direction of the weekly candle reversal, I now can trade the higher probability continuations of order flow because the displacement itself is confirming that the weekly candle is no longer in that protraction or accumulation phase. It's now in the distribution phase. And in distributions, we create market inefficiencies. In here, you can notice we are clearly in a consolidation. How do I know that? There's a lack of market inefficiency, and also none of the inefficiencies are being respected. When we have fair value gaps like this, they're getting absolutely torn through, and there's no follow through on either side of the market, okay? Look. Do you see how every fair value gap in here that we're creating, there's no follow through? Like, price is not doing anything from these fair value gaps. once we start to actually move away from these fair value gaps, so once we start to create, and it's actually much easier to see on the 4 hour. So look at all these breakaway gaps in here, okay? This is a very good indication of bearish order flow. And you've heard me say the highest probability fair value gaps are the ones that aren't retraced, because this is showing me the market is displacing. We're actually moving towards an objective. So we're forming these fair value gaps and we're moving away from them. And then that's why on Friday we saw this SMT inside of this array right here. Let me get rid of these two. We saw this SMT inside of this gap right here. And that's where our opportunity zone rested. We had all this breakaway, all of this displacement. And the reason why it's a breakaway gap, obviously, if you watch my lecture on FVGs, is if you look left, this is a BPR, right? This is very obviously a BPR. Price has no reason to come back into here because we have inefficient price delivery on sell side, inefficient delivery on buy side, and we have significant lack of time to rebalance. Meaning we're already on Friday by this point. I would not want to see the market do this. I'd want to see the market really, really shallowly retrace and then rip, because we need to expand, on one of these days. So you can see that once we form this balanced price range, we start to displace lower, Amy, that's when I know the market is actually in expansion phase. So fair value gaps, right, show us the market is willing to move. It's telling us the market is in a displacement. It's telling us that we're no longer manipulating or expanding, which I refer to as the protraction phase of a weekly candle. Like I said, go watch my weekly profiling lectures. I'll go through each of the profiles, right? So I'll go through this and I'll explain this to you as a midweek reversal, or I'll look at an example of a classic sell or buy week. The reality is all weekly profiles share the same underlying DNA, and that is protraction phase, expansion phase. What confirms this? Higher time frame PD array, SMT, SysD, displacement. And once you become adept at recognizing that these have occurred, that is when you're trading this part of the candle. This part of the candle is very different than trading the opening part of the opening phase of the candle, which usually are something like this, a consolidation, or they're a manipulation. Right? Once you can recognize you're trading the expansion phase, you're on side with order flow. I hope that makes sense. Fees, first I want to comment or teaching. Absolutely, yes. I typically use weeklies. So if we are in a classic expansion week, I will utilize weeklies. If we are in a midweek reversal or Thursday counter, I will utilize 2 weeks of, or sorry, dailies. So if we're reversing on a Thursday, right, or Wednesday, I'm going to use dailies. If we're on a Tuesday or Monday high of the week, I'm going to use weeklies to capture more of the range in exchange for trading some of the volatility of the delta. So if I want a classic sell week and I see a reversal protocol form on Monday, I want to hold for Tuesday, Wednesday, and Thursday. I'm using a weekly contract for options. If I see something like I did last week, I would be using a daily expiration on the Friday. Because I would wait. I would actually let the Thursday print before I bought options. And then on Friday, I would see that we're trading into the range, deep into it. Here's my objective, right? Equilibrium. And I would buy a daily contract. Does strike price matter? I keep my strike price very close to being in the money when I buy it, so I can capture as much gamma as possible. So I keep my strike price in the money on purchase, which is more expensive always, but it really explodes in IV if you get a large range. I'm not an expert at options, but I typically try and buy options only in the money ever when I'm buying them. Maybe that's ideal, maybe that's not ideal. It's just the way I do it, because then you get a massive IV like spike, a gamma spike when they go deeper in the money. Okay, so this is an example of that midweek reversal, which is a name, but I want you to pay attention to the components of weekly profiling that are more important. So you notice the name or day of reversal is largely irrelevant. We look for the same components every time. We look for a manipulation of an external range, high or low. That's going to be that PD array. In almost all cases, that higher time frame PD array is going to be a manipulation of an external range high or low, which is why it's called a weekly range protocol, okay? Wait for an external manipulation of a range high or range low. Then you want to see SMT plus SysD on the associated lower time frame. I like to use the hourly. You can also use the 4-hour. Then you want to wait for displacement, right, opposing the manipulation. Once you have these components, that is when the draw on liquidity is likely to be reached for the week. If not, you are probably trading the manipulation phase of price, which is this, or the accumulation phase of price, which is this. Lower probability. As you can see, once we have the protraction phase occur and we get the reversal, that is when price actually draws in to our draw on liquidity that we had marked out all week, which is going to be this equilibrium of the range, okay? Only once we get that structural realignment, okay? That's the critical thing. So let's take a look at another example here. Let's prove that these components are universal when we're looking at weekly profiling. So again, let's use another weekly candle. Let's use the previous weekly candle. I'm going to use the replay function for this, okay, guys? Again, every week I'm going to mark out the previous weekly low and the previous weekly high. Why? Every weekly candle is a range, and the likelihood of an inside bar is lower or higher. How many inside bars do we get in the market relative to outside bars, guys? Someone tell me. This is just an arbitrary statement that someone might know, but what is the proportion of inside bars to outside bars? Look at these candles. How many weeks do we form an inside bar versus taking the low or the high? The only inside bar price I see in all of these weeks is... Where is it? Where is it? Let me find an inside bar for you guys. It's hard to find, so I should answer your question. Maybe this one? Nope, we take the high. Let me find one inside bar for you guys. Okay, well, I've answered your question by just doing this. Ah, here we go. Oh, we take the low, never mind. I'll find one, don't worry. Ah, here we go. There we go. So this is the only inside bar that I can see going back on my weekly chart in August of 2023. Okay? The rest of them are what types of bars? Outside bars. So you guys tell me, what is a more common price delivery, right, characteristic of a weekly candle? An inside bar or an outside bar? What do you guys think? Outside bar, right? Everyone say it. Everyone who's paying attention, put outside bar. Nice. This is the stuff that, it seems so obvious, but sometimes you need to just convince yourself of it by looking at it, right? Sometimes you need to go on a chart and be like, oh, he's totally right. I could actually say with a high degree of certainty that the majority of weekly candles are a range that contains some external manipulation. They're not inside bars, right? Yeah. Sweep the previous week low, sweep previous week high. Okay, I proved that to you. That's why it's important to have previous week high, previous week low on your charts. I'm also going to just mark out for this week the external range highs, just because they are failure swings to this previous week high and low. Let's go down to a 1-hour chart, which is my favorite chart for analyzing a weekly profile. I just like the look of the 1-hour chart and being able to tell me. Also, this is all in context of a market maker model. Again, please watch my weekly profile lessons. I go into so much more depth about each phase of the weekly profile and what you're looking for, and then also framing things like your market maker models, right? But this is not that. This is going to be a generic lesson on the characteristics of weekly candle reversals, which I think is so much better to learn from a generic standpoint before you get into the nitty-gritty of, well, what's a Tuesday reversal? Where do I draw my standard deviation projections from? All of that is stuff that are just nuances to really what the macro is doing, which is every weekly candle is going to have a reversal. Let's find out when it occurs and how to trade against it. So we're going to study the opening days of this week. Monday, we study Why do we, so based on what I've said about a weekly candle likely to form a reversal at some point in time, likely to be an outside bar, not an inside bar, why do you think Monday is so important? Use the words open low high close or open high low close. Why is Monday so important if every weekly candle is likely to look something like this? Why is it so important to look at Mondays? Nice, because it's consolidation of the OHLC, OLHC. Yep. But what more? What's even more important than saying Monday typically consolidates the weekly range? Yeah, we can, it's the flop. We can determine, right, if we're forming the open low or open high. Sometimes Monday is the weekly manipulation. I really like that, actually. It gives us an indication, yes, of what profile we're in, and it rules out what types of weeks. By Monday, sometimes we rule in classic expansion, right? If Monday accumulates, we look to Tuesday. If Tuesday accumulates, we look to Wednesday. It gives us a foundation for the if then characteristic I've been talking about for the past hour, right? We're looking for a statement to determine if the weekly candle has reversed. Remember, a reversal always does. Higher time frame, external range. I usually say higher time frame PD array, right? This could be IRL or ERL. What I want you to recognize is that IRL, if it's manipulating into it, is going to be a lower time frame external range. If that doesn't make sense, then we need to have a conversation. Does everyone understand the statement that a higher time frame IRL is a lower time frame ERL? Does everyone understand that statement? Yes, no, maybe so. Yes. Cool. Very important, because we can now say that instead of saying a higher time frame PD, I'd much rather you guys use the term and the wording, right? A reversal always engages an external range, okay? It engages an external range. Forms SMT at that external range. 3. SysDs on the intermediate time frame. Displaces towards or away from the manipulation towards in the direction. If I can just gel this into your brain, a reversal always does 1, engages an external range of liquidity, which is why I was working with T-Trades on his indicator, which is essentially exactly what we're talking about, fractalized. Right? A reversal always looks like this, honestly. Okay? We engage some sort of external range, and we're going to wick below it and close above it. Now, the reason why sometimes we say a higher time frame PD array is that this external range could rest right below, a daily fair value gap, for example. But this is the context, right, of a reversal. You wick below, we form SMT divergence almost always, if it's high probability, and then we start to expand away from that manipulation. That is what a reversal looks like, characteristically, by nature of candlesticks, okay? That is what they look like. So we're always going to wick and close, which is going to be engaging external range, right? Look at the weekly chart if you don't believe me, right? Wick, close, wick, close. This week, wick, open low, right? Wick, close above. This week, open low, wick, close back in. This week here, open low, close above, and then continue to expand, and then wick above this high. So we're always going to be looking for when this is happening. So for example, on a week like this, we don't engage the previous week low. We simply expand. Well, obviously, you can see that we're in expansion phase of this weekly candle. But if I go into my hourly chart here, and again, I've marked out the protraction phase of this candle, you're going to see the same 4 things I just said to you, right? This week. What is price going to do? It's going to engage some sort of low with SMT. Now, in this case, I remember this week. We don't even take out these Monday lows. We don't form a significant divergence here. Maybe it's the YM. Let's see. I think I remember this week because I remember being very hesitant of this reversal because we did not have a nice SMT here. Yeah, I was with the YM. So the only this week was interesting because we had a divergence with YM, I believe, below these lows, but we don't really look at YM too frequently. This was that. Up in here, we had this gap on YM, so this was the reversal because YM literally did gapped up in here. But I remember this was a low probability week. Let me show you another week where we can gauge an internal range of liquidity instead. Let me show you a week that just continues like this. Okay. This box I'm marking out, again, is the protraction phase of that weekly candle. I want to show you how even if we don't engage the previous week low, we don't always have to engage the previous week low. You will still have the same characteristics of running an external range low. Okay, see? Even if it's not the previous weekly low, it's going to be some external manipulation. So what does Monday do, guys, in this week? Accumulates, right? And expands. And then Tuesday deviates the weekly range low with SMT divergence. That deviation of the weekly range low followed by what? SysD and displacement opposing the manipulation. That is when you can trade the high probability days. What's that day going to be? Wednesday, Thursday, right? Friday is likely to accumulate, which it does, right? So Wednesday and Thursday are your opportunity days. Really, it's just Wednesday because Wednesday does the entire expansion of the weekly range. Okay? So even if it doesn't run the previous week low, sometimes I'll get my students being like, what about the weeks where it doesn't run the previous week low? It just simply comes back into the weekly, like these weekly candles look like this, okay? That's one weekly candle. And the next weekly candle does this. Okay? This wick in here will still contain an external range manipulation low. I promise it will. This wick into this previous weekly body will have this signature that we just saw right here, which is going to be that external range manipulation. Okay? I promise you it will. So now we've really refined what we're looking for every single week, right? Where are we? A weekly reversal will engage an external range of liquidity. It will form SMT at the external range. It will SysD on the intermediate time frame, and it will displace away from the manipulation. So in this week, let's study the opening days. Monday comes in, and what do we notice Monday does here, guys? It engages an external range low. Does it form SMT? Yes. So we will mark that down on our charts. It does not mean that we just long the market at this point in time, but we have a condition. If Monday now, we always say if Monday manipulates, Tuesday expands. Can someone give me a better way of, based on our conversation that we just had, can someone tell me a better way of wording this based on our conversation instead of saying if Monday manipulates? What about something like if Monday engages an external range with SMT and we SysD higher forming FVGs, then Tuesday expands, okay? So let's be more deliberate with our words. Instead of saying if Monday manipulates, Tuesday expands, let's say if Monday engages an external range, low or high, with SMT, and then we change delivery state and form fair value gaps, Tuesday will expand. If we don't do that, let's not say Tuesday expands. Let's just wait and see if these things happen. Wait for the external range, wait for the chain of state delivery, wait for the fair value gaps to confirm the weekly candle reversing. Then say Tuesday expands, right? Then say Wednesday expands. Then say Thursday expands, right? Until the draw is met. Only when we see engages external, SMT, SysD, fair value gap. I'm going to drill this into your guys' head because this is really what makes the highest probability trading possible. So we see this SMT in here. And now we're waiting for the consecutive series of down close candles into that key level to form our chain of state delivery. What'd you say, Hafiz? We're waiting for the consecutive series of down closed candles into that key level to be closed above with displacement to confirm our change in state delivery. A change in the state of delivery. What is that? I'm going to make you say this, the consecutive series of opposing candles into a key level. And what's the key level? Let's be even more specific. Into the external range, low in this case, with SMT. Alright? So from now on, when you draw your SysDs in your head, you're immediately going to say, I remember what Hafiz told me a SysD was. It's the consecutive series of opposing candles into the external range low with SMT in this case. It could also be the external range high. It's a mouthful. Wait for that. Okay? It has to be these candles. These ones. Once we get that chain of state delivery, you're also going to notice we have the next condition met, which is displacement of market. Fair value gap. Okay, cool. We now can confirm that Monday manipulated, forming the low of this weekly candle with very high probability. We had a change of state of delivery on CPI, or Tuesday, whatever this was, whatever news this was that caused the market to go like that. And now we have a fair value gap. So now we can say the market's likely to expand. Does that mean you should long the market before that SysD here? No. You shouldn't long, right, this fair value gap in here, for example. You have no idea, right, that price is going to shift delivery state above the consecutive series of opposing candles into the key level with SMT. You have no clue. So wait for it, okay? Then you'll notice market gives you a beautiful entry right at around 11 a.m. here inside the fair value gap. Once the SysD has been confirmed, right, then you can trade the continuations. Now, if you really want and you're really eager, right, I taught my students last week how to trade the reversals. So how to anticipate this higher time frame SysD will form using something like a 15-minute or a 30-minute SysD earlier, something like this, right? So when you see this form, for example, you can trade the 15-minute chart here before the retest. Now that's the only difference, and that's just trading the reversal. But in general, when I'm talking about weekly profiling, you're waiting for this change of state of delivery, you're waiting for this displacement, and then you're trading the opposing days. That's when the beautiful standard deviations can be projected onto your chart, mapping to that manipulation, right? You can either use the entire manipulation leg, and you can see price is very well contained by this terminus in here, right? Beautiful. That's where the weekly profile really makes sense, right? Look at that second standard deviation. That's that short-term reaccumulation. Then we expand through it all the way up to 4 to 4.5. Okay? Same components. External range low, chain of state delivery, fair value gap. What's this profile called? Classic bye week, right? So what do we expect Friday to do? Maybe TGIF, come back in the range, right? So you'd be looking for maybe short sells on Friday. As you can see, this week does not offer any sort of TGIF. So maybe Monday will, right? When Friday fails to, maybe Monday does. There you go, right? Monday comes back in the range here into this. Right, very close to that 20 to 30% of that previous week. So that's a very classic bye week, right? Notice I don't care about the names. I'm just looking for the things that are important to qualify the weekly reversal. Keep it so simple, right? There's so many complicated ways of understanding profiling, and I am simplifying, and that's okay, right? I have lots of lectures that go way, way, way more in depth on profiling, right? And you can get way more specific, and you can look for very specific things, and you can look at reaccumulation areas, you can look at standard deviations, you can look at market maker models, whatever. Let's keep it so simple. Let's choose another random week, okay? We'll do one more. I'm going to prove to you that every single week is the exact same shit. You just got to be very, very deliberate with your words and what you're utilizing to gauge the weekly candle reversal. So let's look at, right, let's look at this protraction phase of price, this weekly move lower. So the first thing we're going to say, so we have a very obvious draw on liquidity. Very obvious. And how do we know that? Well, guys, do you remember my daily bias method? Use it on the weekly candles, okay? What's your daily bias, or what's your weekly bias, someone, for this candle? Would everyone have a short bias based on the previous week candle close? Yeah. Why? Why am I bearish for this candle, guys, based on this candle close? Yep, exactly. Wick above, close back into the range. It's better that it went open, low, high, close. Open, low, high, close. Close where? Back in the range. What do we have? Two really nice market inefficiencies, right? So if we get bearish order flow, obvious draw on liquidity. Super obvious draw on liquidity. Nice. So realistically, guys, my entire weekly bias, before I even see this weekly candle form, is, I'm bearish. Based on one candle closure. Isn't that crazy? Right? Why? We zoom out. We have an SMT at a higher time frame swing point. Let's see. Where is it? Here we go. We have an SMT at a higher time frame swing point inside of a bearish array, right? This weekly fair value gap right here. There's your SMT. And we had this candle close. There we go. That bias was super easy and it took me all of 5 seconds to understand. I'm looking to come back internal to the range. Now this week, I'm going to approach, right? Trying to frame that using a weekly profile. So what am I going to do? Same as always, right? Previous week low, previous week high. Previous week low, previous week high. Previous week low. Previous week high. Right, the weekly candle is a range. Onto the hourly. I can clearly see that my draw on liquidity is going to be well past the range low of the previous week. Very nice to see that. Okay, so now I understand that what I'm looking for. And why is that weekly candle not in the right place? 1 second. I know that once price comes below previous week low, I'm still looking for lower price, for example. So I'm going to study the opening days of this week. Oh, we have no trading on Monday. That's interesting. Bank holiday or something. Okay, so on this Tuesday, right, what do we see price do? Let's see. Price opens the week, trades lower, expands through the previous week low, right, into this weekly fair value gap. In doing so, what have we done? We've formed significant divergence, right, above a higher time frame external range with SMT. Good. So let me see. Stop hunt. Stop hunt. Okay. So we're not coming into previous week high. ES puts in this failure swing. NASDAQ puts in this failure swing. So previous week high is out of the question for me. Change that. Now, price expands through previous week low. I know my draw is much, much lower. I know my draw is going to be inside these fair value gaps, right? Somewhere inside of here. So I'm looking for sells because price has failed to manipulate the range high and is instead formed a stop hunt with SMT at an external range high. Consolidation, external range stop hunt. But fees, right? How do we know it's not going to go lower and then higher off this previous week low? Expansion functions with displacement. We are displacing through the previous week low. The draw is lower. It's not higher because we're displacing through. So what do I want to wait for? Same three components, right? Remember, weekly reversal does what? External range, liquidity, plus SMT. H1 sys in this case, displacement, right, in the direction of reversal. Qualify all three statements. ERL plus SMT, bang. H1 sys let's mark it out. I'm actually going to use these two candles in here because those two candles are the consecutive series of opposing candles into the key level with SMT. Displacement, 1 fair value gap, 2 fair value gaps, 3 fair value gaps, 4 fair value gaps, right? So say I don't, so now, how am I going to approach trading this? Well, once I have this displacement lower in London, I come into the New York session, what am I looking for? Am I looking to long? No, I'm looking for a fair value gap to trade the expansion lower. Good, I have this fair value gap right in here. And this fair value gap right in here, same one. Okay, let's see what happens. When does price come into it? Price doesn't even come into it at 9 a.m. Unfortunately, we put in a failure swing up here. You guys notice a failure swing right here, the fair value gap. That's super bearish, but it probably wouldn't give you the best entry because you wouldn't have SMT inside the gap either. So again, you just wait, right? And then price here forms that really, really obvious nice diversion. There we go. That's super clean. All right, that's way more obvious for us. There's that SMT. Here's that SMT. And then you trade this next candle short, right? From this internal range of liquidity down to the external. Then the next day, right? Well, fees, we're in the weekly fair value gap. Are we going to look for longs yet? No, right? What do we need to see if it was going to reverse down here? What would we need to see if the weekly candle wanted to do this, guys? So manipulates down to here and then reverses back up higher. Well, we need to see the same 4 things I told you before, right? Higher time frame, external. Do we have that? Yeah, we do. Right. Do we have any SMT in this higher time frame external range liquidity? Yeah, we do, right here, right? Below this low, for example. Cool. Do I have a change in state of delivery ever inside of this gap? Someone tell me. For the next day, on Tuesday, do I get a change in state of delivery higher on Tuesday, guys? Higher. No. There's no SIST higher. Order flow is bearish. On Wednesday, is there a SIST higher? No. On Thursday, is there a SIST higher? No, right? So what do you look for on Friday? Well, it's a classic sell week, so what are we going to try and frame? A TGIF, right? So this is a classic sell week because Tuesday forms the high here. That's beautiful, right? Simple, super simple. If then, the number of times you'll be like, well, I wanted to look for a reversal, right? From this inefficiency. How are you going to rule that out? Just wait and see if we get any form of change in state delivery higher. No. What are we getting? Displacement lower. Displacement lower. Fair value gaps. Fair value gaps. Fair value gaps. Friday comes back in the range. Okay? So this is an example of another very obvious week to trade, and you're looking for the same components, right, that validate this profile, and the same components invalidate this profile. Notice, this profile is invalidated by the same components which validate this profile. This profile we do not get, even though we have, right, let's look at the 4-hour chart, you're going to see. Even though we have SMT that forms right here, okay? Let's look at it. We have SMT that forms inside the fair value gap. So external range low, check, right? SMT, check. What are we missing? Well, if we wanted to look for longs, we'd have to close above this high, guys. That's why reversals are the hardest things to trade, because you might think that this is going to reverse. And this candle could do all the way, this candle could do this. And come all the way back into this gap. You need to wait for the change in state of delivery that would qualify the reversal. We never get that on Wednesday, Tuesday. We don't get it on Wednesday. We don't get it on Thursday. And then on Friday, again, we don't get it, really. We do. We get it right here. Friday, you're going to see that's exactly where it does form. So Friday is the only day you can look for longs back in the range based on what? The SMT that forms, TGIF expectation as well. And then also, look how nicely we actually end up getting this chain of state of delivery going into the session. Look. Right? We have these consecutive series of candles into that key level with SMT divergence. Once we have this SIST in here, then you can look for longs. Right? Now on a Friday, I'd be looking to trade the intraday reversal. So I would be using something more like this chain of state of delivery in here. Like just that candle. And then you can look for longs, right? All the way back into what? 30% of the range, which we said was up here. So that's the only time you look for longs that entire week. And it's the same 4 components, guys. It's super simple. Do you notice how we've done 3 different types of weeks? Classic sell, consolidation. Let's do one example of a Thursday counter, okay? And then we're done. So a Thursday counter is a week which we see quite frequently, which is a Thursday reversal. This is a midweek reversal. Let me find a Thursday counter for you guys. Classic bye week in here. Beautiful. Okay, let's go this week. Actually, this is a Friday expansion day, so let's do one that doesn't expand on Friday. I'm looking for a specific week. I go as a CPI day. I want it's a really good example of a Thursday reversal. Here we go. Perfect. This is the week I'm looking for. Just a really obvious example of a Thursday counter. I haven't showed you guys a profile like this in a while, so here we go. Here's an example, right? We'll do the same markup. So we're looking at so that's the previous week low. Let's go mark out the previous week high. We'll do the same thing right here. Friday forms the previous week low. And then Monday was the previous week high. Nice. Okay. This is an example of a Thursday counter again. The names don't matter, guys, right? After, right, we see this conditions, we don't really care about the names. It's more so about the four things we're looking for. So as you can see, you want to study the opening days, right? So the opening day of this weekly candle, you can see, we do not take the previous week low. Instead, what does Monday do? It manipulates an external range low. It manipulates an external range low with SMT and then starts to expand. So I'm going to mark out this weekly open for you guys as well, actually. It's important. Let me rewind just a bit. There you go. So we come below the weekly open very, very shallowly, but we form this SMT divergence. Okay. Now what do we need to see to confirm the weekly candle is reversing from this manipulation on Monday in the London session? A weekly candle. We can even say reversal, or we can use the better word here, which is going to be expansion, is confirmed by SMT at ERL, SSD, right? FVGs in the direction. Look how simple it is, guys. The same things again and again and again and again and again every single goddamn week ever. It will do this. I promise you. So wait. The consecutive series of down close candles into the key level, right? We want to see expansion higher. That's my chain to say delivery. I am now looking for longs on this weekly candle after this change in state of delivery. Okay? What is my objective? Well, every week is a range. So if we're not going to stay inside bar, what are we likely to do, guys? Go for previous week high or previous week low. We talked about that. Remember? We said of all the weeks we looked at, very, very few are inside bars. So where are we going? Previous week high or previous week low? That's the question we have. Where are we going? Previous week high or previous week low? We have a range. Where are we going? Well, I'm now bullish, and I'm looking for previous week high. Simple as that. The entire framework for my week has been framed until when? Previous week high. Then I will have to consider what the weekly candle is doing past the previous week high, because it could also reverse there as well, which we're going to see. This is called a Thursday counter. And a Thursday counter is a very unique weekly profile because it involves an open, small manipulation, expansion, 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 reversal, and then usually deviates back below the weekly open. So it actually contains two unique expansions of price. A Thursday counter, right? So a consolidation reversal is what a lot of people know as Monday, Tuesday, Wednesday consolidates, and then Thursday expands. That's interesting. But a Thursday counter involves a Monday, Tuesday, Wednesday expansion, meaning we have our three confluences for one side of expansion. Then we have a Thursday reversal, which we have our three confluences again for the other side of expansion, okay? This is a cool profile because a Thursday counter is going to offer you two examples of what I'm telling you to look for in price. 2 times it will happen, okay? Don't believe me, go look. Go back and backtest every Thursday counter, okay? Where we get Monday, Tuesday, Wednesday expanding in one direction, and then Thursday expanding in the other direction. It's a weekly profile that involves, so a Thursday counter involves 2 unique phases of expansion in either direction. So Monday, Tuesday, Wednesday, expansion in one direction. Thursday, and typically Friday, expansion in the other direction. It's a very, very volatile weekly profile that involves one side of the market expanding and then the other side of the market expanding, and there's really very little accumulation, typically speaking. The accumulation happens intraday and not on a specific day. You'll get a full reversal of the weekly range after, you'll essentially get 3 to 5 days of expansion in the week, which is quite rare. Anyways, here's what I'm looking for longs in that chain to stay delivery. Again, I'm not going to go through the entry techniques with you. You guys know. Fair value gaps, order blocks, whatever you want, to previous week high. Then we get to previous week high. And what do we see? An SMT at the external range. So, a weekly reversal. Let's start using the word expansion as SMT at external ranges. At an external range, okay? Change to delivery, FVGs in the direction of the reversal. Okay, so we had that we had those confluences for this side of the curve. Now let's see if we can get it on Thursday as well. Price comes in, right? We form SMT. Let me draw out my SMT on the ES so you guys can see it. Okay, cool. What are we looking for next? Change in the state of delivery. What is the change in the state of delivery, Afees? Change in state of delivery is the consecutive series of opposing candles into the key level with divergence. So in this case, this is a very, very messy, choppy kind of SysD area to mark out. So I'm just going to go up a time frame and try and find a cleaner one. Or go down a time frame and try and find a cleaner one. I want to use the consecutive series of opposing candles. Remember the word opposing? I don't want to use this as my SysD, guys. Why is that not a good SysD for me to use? Well, these are not the series of opposing candles into my key level with divergence, are they? No. This is actually a down close candle on this time frame, so it's not a good time frame to use my SysD on. Let me refine that to a better time frame. Now I have these 2 opposing candles into my key level with divergence. And on the ES, it's just this one opposing candle. That's a better SysD for me to use. If you want to be safer, you're going to say, well, I want to wait for, maybe this price leg to be inverted. I want to see this inversion fair value gap as well. Fantastic. So you're going to wait for this changes day of delivery. Now, as you notice, I want to trade the reversal, so I'm going to be looking to get involved in a lower time frame SysD. Okay? That's it. Okay. As you can see, this is the one I use. You don't see it on the hourly chart, but you see it much clearer. on the 30-minute chart, okay? And you'll see it even clearer on something like a 15-minute chart, right? Again, it's just refining this based on the narrative of the price delivery. Again, another thing I'm looking for, right, is for these fair value gaps to be inverted. You guys have seen this in my SysD commentary, right? What I look for in a strong SysD is going to be that inversion fair value gap as well. But that is what I'm going to use to qualify my reversal. And then you're going to see price does what? Starts to form displacement in the direction of the reversal, right? As soon as this balanced price range is created, you now know the draw becomes what? Do you think that these fair value gaps are going to hold? No. These fair value gaps are not going to hold because we have the context of the weekly candle reverting back to what? The opening price. Because Monday did what? Not manipulate the weekly range very much. Monday did this. And now we're doing this. We want to see us dig below the weekly open. So that's where you can say these fair value gaps are going to fail, right? Given the context of what? The weekly candle reversing up here. And then as you notice, ES actually comes all the way back in below the weekly low, forming what kind of weekly candle? One that looks like this. This is the ES weekly candle. Right? NASDAQ actually maintains prices above that weekly open just barely, but this is a classic Thursday counter, and you're going to notice how just wicky that is, and just how volatile both sides of the market is, because the market does this. Which is very similar to what type of protraction profile, guys? Let's draw a parallel here. What type of protraction profile does this look like? Classic delayed Judas. What would you guys say this looks like? This was like an intraday chart, like a 50-minute chart. What kind of protraction profile is a Thursday counter? Yeah, delayed protraction. Do you guys see how this could easily just be? This could be the Asian session. This could be the London session. And this could be your New York Open. Into the New York Open. Look, how many days have you seen price do this? Look at the market maker sell model. From the market maker buy model. This is very similar to a delayed protraction, where we form these inverted doji kind of candles. The ones that look like that. Right? Price trades higher as a function of manipulation, then reverses all of it. Interesting, right? Interesting parallel between protraction, right, and this weekly protraction, which is going to be a Thursday counter. Anyways, so as you can see, as you qualify reversals, you have to make sure you're mechanical with it in some way. And the best thing to do is wait for those three things, right? SMT and external range, change the state of delivery, below the consecutive series of opposing candles. So if you want, right, be safe. Use these. Once you get that chain of state of delivery, you want to see fair value gaps in the direction of the reversal. And remember, the highest probability fair value gaps are what? Those that are never retraced. Okay? That is the highest probability fair value gap. If the market is displacing and not coming back into the fair value gaps, that is high probability. So that's when you look here for lower time frame entries. When you see that massive gap form, you don't say, well, let me wait until this massive gap is retraced. No. What do you wait for? Look at this 15-minute fair value gap. Look at that institutional order flow entry drill right there. That's what you look for. With what? What's obviously going to be in here? SMT, right? There you go. Perfect. Right at the New York Open, you get a very, very nice SMT. That's all you're offered. What? Does this remind you guys of Friday? Does this remind you of Friday? Yeah, right? Very, very shallow retracement, right? Just a little SMT right at the open, right at 9:30, 10 o'clock, and then price explodes lower. Because you're trading the expansion phase of price, right? If you wait for it too long, you're going to get chopped up in this area here. And then eventually you can see price comes all the way back down below the weekly open, right? So you had this first weekly candle reversal area. What do you want now, Charlie? So this is area 1. weekly candle reversal 1. And then this is also a weekly candle reversal here. I like Thursday counters as an example because it's a good chance to actually see how they happen on both sides of the market. Weekly candle reverses there, and then weekly candle reverses here. Okay, so that was today's lecture. Pretty simple, right? It's going to be on